SpaceX doesn't have a stock, yet billions of dollars in its shares are trading hands right now, and the price swings determine the future of your internet, travel, and even national defense. Here's what's really happening: a hidden, private market where SpaceX shares are bought and sold, completely invisible to the public. But the key isn't just how they trade, it's who gets to trade, and why a single rocket launch can make or break fortunes before the company ever hits the NYSE. This week, the price of those hidden shares snapped a brutal losing streak, and it reveals everything about how the modern wealth machine really works. You probably saw the headlines: SpaceX stock rallies ahead of Starship launch. It sounds like any other day on Wall Street. A key event is coming up, and investors are buying in, pushing the price up. But if you went to your Fidelity or Schwab account and typed in SpaceX, you'd find nothing, because SpaceX is a private company. So what stock is actually moving? The answer lies in the world of private secondary markets. These are exclusive, over-the-counter platforms where early employees and initial investors can sell their shares to other wealthy, accredited investors. It's a multi-billion-dollar shadow system, and its pricing is based on a completely different set of rules than the public market. The recent losing streak wasn't seen on CNBC's ticker. It was a quiet downturn in private trades as Starship delays created uncertainty. The snap was a surge of optimism from the same small pool of players. So the real question isn't if the stock moved, it's how this private casino operates and who gets a seat at the table. Unlike a public company that must report its financials quarterly, SpaceX's private valuation is a black box, driven almost entirely by sentiment and major events. If seeing how this hidden market operates is already changing how you view stock news, subscribe. We decode a new corner of the financial system every week. This sentiment is traded on platforms like Forge Global and EquityZen. Here's how it works. An early SpaceX engineer wants to buy a house. They can't wait for an IPO that might be years away, so they list a portion of their vested shares on one of these platforms. The buyers aren't you or me. They are accredited investors, individuals with a net worth over $1 million or an income over $200,000, and venture capital funds. These are the only people the SEC permits to participate in these high-risk deals. In late 2023, these trades valued SpaceX at over $180 billion. But as Starship tests faced delays, demand cooled, and the price in these secondary trades softened. That was the losing streak. The upcoming launch renewed confidence, and buyers returned, pushing the private valuation back up. The price isn't based on a PE ratio. It's a direct bet on engineering milestones. A successful flight could push the private valuation toward $200 billion. A failure could vaporize billions in paper wealth overnight. This is the volatility that the public markets are shielded from, and where the biggest pre-IPO fortunes are made and lost. So, what does this hidden market for SpaceX shares mean for you? It's a clear signal of a fundamental shift in finance. Companies like SpaceX and formerly Stripe and Reddit are staying private for far longer. Why? They can raise billions from these private markets without the intense regulatory scrutiny, quarterly earnings pressure, and public disclosures that come with an IPO. The consequence is that the explosive growth phase, the 10x, 50x, 100x returns that created fortunes with early Amazon or Google stock, is now happening behind the velvet rope. By the time a company like this goes public, the biggest gains have often already been captured by that small circle of early employees and accredited investors. For the average person, this means two things. First, your ability to invest in the most innovative, generation-defining companies is delayed until they are mature, massive, and have much slower growth ahead. Second, when the IPO finally happens, you are often buying at the peak of the hype. Insiders who bought for pennies on the dollar years ago are now looking to cash out. The IPO pop is often followed by a slow bleed as these lockup periods expire and early investors sell to the public. The real money was already made in private. Is it fair that the biggest wealth creation opportunities are now happening in private before the public ever gets a chance to invest? You saw the public headline about a stock price, but now you know the real story happens in a private market driven by rocket launches, not earnings reports. It's a system where insiders trade billions based on sentiment, while everyone else waits for the IPO crumbs. To keep getting this inside look at how wealth is really created, subscribe. Our next video decodes how Wall Street banks are using AI to predict layoffs before your company even announces them. Now you see how the money really moves. Money decoded.